Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn & Associates with your metals market update for the weekend edition for this Friday, October 5th, 2018. All right, my friends, a crazy week with all we've seen. The commentary over the weekend when you read all your news is going to be the speed that interest rates in the U.S. have climbed, where they're up to, into the 3.2 area. Double lines, Jeff Gundlach thinks that there's a breakout on the 30-year bonds, which are going to go substantially higher over time. May be right. Here's what I know. Today, the stock market broke hard, and as usual, on deep breaks, buyers did show up. That's all that I could say. It's been about a 3-day break. You got down to important areas in some of the markets. If you look at the 200-week average in the Russell, the 100 in the NASDAQ, you'll see. Metals did their own thing. They acted interestingly strong, very strong for the gold and the silver. So let's take a look at the gold chart. Does it look that way on the monthly chart on gold? Absolutely not. Not so here. It does on the daily. Lower highs, lower lows. That's bearish. Last week's high in gold, actually last month's high, was 12.40. So the key for this market, in my opinion, is if you take that out, you will break the pattern of lower highs, lower lows against the Bollinger Band, which could set the market up then for a challenge of the 18-month moving average of closes. The chart starting to look a lot different on the weekly. This is just a close, but as you can see, the market left that 1161.40 zone, and I happen to think that was an important low made at the time that Venezuela was probably dumping gold in order to keep their economy alive, certainly Turkey. I mean, I read the gold reserve reports and what was going on, and we've seen central bankers suddenly showing up and buying some gold. Now, that could be in reaction to what? The U.S. trade problems that we're fighting with everyone. But you got to admit, Mexico, Canada, we have 2 deals there. We'll be talking shortly with our friends in Europe. South Korea, we've got a deal, and Japan's on a fast track to a deal. As you take a look at the weekly bar chart and just put on the highs and lows, you can see what the market's doing. It's still on the weekly chart, lower highs, lower lows. But once again, we're just talking 12.12 and a fraction. If you take out 12.1080 on this chart, you break the pattern of lower highs, lower lows. Where's the resistance? 12.2420, and that number is going to drop Sunday night. It's dropping right now on an average about $5 a week, so I think it'll get closer to the 12.19 zone or so when we reopen on Sunday. But it still says that even if you get over 12.1080, you got layers of resistance above you. Is there anything bullish on this chart at this point? There is not. It's the daily chart that looks better. This is still lower highs, lower lows under the 18-week average of closes. You're nowhere near the Bollinger Band, so it would take a big event to get them back down, and you'd have to make a new break low to get to 1158.40, and I see resistance here at the 200-week average in this gray that I'm pointing to, the 100-week in the 18. When we come over to, let's get away from this one and go to the gold-silver ratio. The gold-silver ratio, you can see that you still haven't crossed on a weekly basis back under the red 18-week moving average of closes. I think when and if that occurs, you'll start seeing the base metals gain on the gold. In terms of the gold ETF, if we take a look at this week's high, we're 114.33. That still keeps the pattern of lower highs, lower lows, but momentum is creeping up on the market. Take out the 114.78 area and you put into play the 18-week average of closes. What do the bears have to do here? They have to keep momentum from getting higher, and they can't allow, in my opinion, to get over 114.78 to keep the downtrend as it is. There's a difference now in the gold ETF versus gold itself. You've got higher lows and a higher high. This week's high was 119.23. In addition, momentum is now turned up. If you take a look back here, you can see how momentum was down. It started creeping last week. It got up to 2018. This week it's even higher. So I have bias down because the market's under the 18-week average, and the 2036 level, I look at a resistance point. To neutralize this attempt at a rally, you've got to take out 1814 on this chart. In the silver market, the rally this week double topped against the old high of 1495. Momentum has turned up. The trend is still down. You've got to take out 1495 to negate that. If you believe that momentum leads price, that is what I'm expecting then to happen. And if it does, the next logical resistance is the 18-week average. If you're bearish in the market because the bias is still down and you haven't taken that out, the key is to get under this week's low to make the market start going back into the downside bias, get rid of that upside momentum. In the copper, you tell me where you ran to. I want you to look here. Now we start getting up to the 18-week and the 100-week. That's where I think the pros on the longer term are looking for the resistance. This is last week, September 28th. This week, again, the failure. So at least we know that that combination is the resistance point. The trend of the market has a pattern of higher highs, higher lows, momentum up, but it's losing the battle against those two numbers. So you've run out of, what do I say here? You've run out of this thrust in the market, but it's not a trend yet. In the platinum, battleground, 18-week average of closes. You've changed your pattern back here to higher highs, higher lows, momentum up, but this is all that part is worth. Now this market has to rebuild right here. In the palladium market, this market, if we take a look at weekly charts, that's up $2. And for those of you that follow me on the daily, I've been telling you I thought that was going to lose to the other markets. Why? Because you got up to your upper Bollinger Band. And I expected the pros to show up there. Momentum is still up, arcing little. You haven't changed the bigger picture in this chart yet. And in the dollar index, you're out of your downtrend, but you haven't begun an uptrend. You've got a higher high, but a lower low caught in the sideways action. As you know, I'm putting together for you a silver report. I wanted it to be today. Unfortunately, in Chicago, we had events. You'll read about it in the national news where they were clearing out the city. Shops were boarding up everywhere. They were scared of protests. I'm still hoping there aren't. We had a big trial case, and we'll see that the city, I hope, acts properly. In any case, call us. You can go to our website to get on the mailing list so you get the silver report. You can click up here to get there, too. I'm Ira Epstein. You have a great weekend. I'll see you Monday.